Why, welcome back. So, this part of the course is about trend lines. I'm pretty sure you hear that all the time. Oh, what's the trend? What's the current market trend? Um, you know, um, price in a downtrend, price in an uptrend. You hear that all the time as traders. And trend lines are, I'd say, one of the most common strategies. Trend line support resistance are one of the most common strategies ever. Especially with beginner traders. A lot of these beginner traders forget to use stuff like price action. They forget to just look at the candles, just analyze the candles. Instead, they just go for analyzing the trend, which, if it works for you, it works. But it's not really ideal. It's not the best strategy going because it is very flawed, especially when you mix trend lines with key levels in the market. There tends to be a lot of backlash of it. So these are the main trendline patterns that are useful, very consistent. These are the most consistent trendline patterns. So symmetrical triangle, ascending triangle, and descending triangle. Um, yeah, so we might not be able to see them in these demonstrations that I'm about to show you, but these are the most consistent ones. These are the ones that I personally tend to look for. If I don't find them, it still comes in useful. Trendline still comes in useful, but usually I do not really, um, just solely base my trades off trend lines. Just like I say with every single other tool or method. So I've jumped into this pair. I've never traded this pair before either. Like I said, with these demonstrations I'm trying to show you, I'm trying to jump into pairs that I've never really used before. So, Canadian dollar, Swiss franc. Okay, so we're gonna be trying to find trends, and um, we're gonna be trying to draw a couple of trend lines. There's a lot of people that say when you draw the trend lines, you should go off candlesticks and use use the line. But me personally, I like using candlesticks when draw trend lines. But if you could, just see yourself, whatever works for you, works for you. I guess you know what I mean. So yeah, just make sure you try to find the best way you think you can draw a trend line. I usually go on like 4 hour or the daily time frame, but let's go on the daily just to find the bad. High time frames hold um, high time frames hold better or more pips. So if you look here, that alone is about 500 pips. That alone is 500 pips. So the time frames do hold a lot of pips. Okay, so let's draw a trend line here. Trend lines, you're basically trying to skim as many candles as you can. Um, the top trend lines in a downtrend is meant to be skimming higher lows, and the lower one's meant to be skimming the lower lows. So here, I've skimmed all the possible higher lows that I could possibly skim. So I'll try to do the same with the lower lows. Um, it's not always going to be 100% accurate, but it will be accurate for the most part. Yep, so there we go. We didn't manage, we skipped out a couple um, lower lows. I mean, you could move it there if you want, just to make the channel a bit slimmer. I think ideally that's the best way to do it in this situation. Ideally, moving it there so that the channel's slimmer is the best thing to do, because the minute price breaks out of this trend line and comes back in, you can easily spot when price is about to take an upturn. Yeah, man. Um, so that's just one example. You just gotta keep practicing trend lines. That's for a downtrend. Let me just demonstrate an uptrend for you. Um, yeah, I think ideally, I'm gonna go for this one here. Remember, this is the daily time frame, so just because it's a very short trend line does not mean it's useless. Because trust me. When, let's say here, if I zoom down to a 4 hour time frame, not even the hourly, just the 4 hour, I can't even find the trend lines. Where's it gone? You know what I mean? Yep, it's right there. So let's say, yeah. So this is the 4 hour time frame for the exact same trend. You can clearly see this holds a lot of pips. Like if you could have taken a trade um, after you saw price hit this lower low. Oh, that's a short position. Take a long position. You place your stop loss a few pips below the trend line. Take profit. However, you could literally place your take profit up here, but we go for 1 to 3 reward ratio. 1 to 4 is good enough. So around there, that would have been an easy winning trade. Let's see how many pips that is. So 200 pips. 200 pips. You just caught 200 pips solely using trend lines, basically. And basically, I just, that right there is just backtesting. Now you can see the power of trend lines. Like I said, confluence is key. Confluence is key. You need to keep that in your head. Confluence is key. Trading, stocks, forex, whatever the hell you're trading is useless without confluence. So make sure you find confluences when you're trading. Practice these skills as well, because trend lines are not your average, you just do it. You just draw a line and stuff. It's not that easy. You have to practice it. You have to make them as accurate as possible, because that could make the difference between placing a stop loss 1 pip below the stop. You do know the markets like to go on stop loss hunt sometimes, where they break structure for a few minutes and come back into structure, and then next thing you know, you won the trade, but you didn't, because the market hit your stop loss 2 seconds before it took a huge upturn that you were predicting. Only because you place your trend line in the wrong place, place your stop loss in the wrong place. So that's why it's very important to practice these skills to make it as accurate as possible. Make sure you practice it, find confluence and backtest as well when you're putting together a strategy. So, for example, look here, this person used trend lines, and you can clearly see he works with them. Anyway, that being said, let's move on.